Welcome back to Give Me Some Truth. Clint and I are in the booth on a very, very frigid February day.
But it's sunny.
Sunny. That's the silver linings, as well as a very strong, surprising jobs report this morning as well. So
that's true.
Interesting development. We didn't expect that.
Well, bad news is good news, and good news is bad news, right? So right now, the stock market, right in the beginning of the day, of course, when they hear that the jobs were great, immediately goes down.
Futures were looking horrible, right?
No, we got a little recovery day.
Right.
You know, we'll see where it stands at the end of the day. Seems to me to be one of those days that'll just end up falling apart at the end of the day.
Well, right, and as we've seen the last week, I guess even longer than that, volatility is here and getting comfortable.
Yeah, and I think that's going to be the story of this year for sure. It's going to be the amount of volatility that we see throughout the year. I mean, this past week is an odd one because it's volatility to the upside. No one cares about that, right? It's all good. All of a sudden, the Fed goes out, talks a little bit, and then everything's rosy. Jerome Powell, best guy ever, and the NASDAQ is off to the races. And then a few weeks from now, it could be a completely different story.
Well, and even I think volatility to the extent that when you looked at just within the markets themselves, right? You had the NASDAQ just losing its mind to the upside on a day that the Dow lost money.
It's weird.
On a day that the S&P made money. I mean, again, so it's not even just volatility to the extent of volatility. It's intra-market volatility, which is very difficult to pin down as well.
Yeah, and I mean, obviously, what the thought is there is that the Fed might cut rates later in the year, or at least not increase interest rates as much as they kind of intimated that they would earlier in the year. And so, that's obviously risk on for tech companies. So, I think we're in a spot now that's a little interesting to see where the market's going to shake out. Why is the NASDAQ doing so well? They're having job cuts right now. It seems like they're paring back. They're kind of having their own recession. And then all of a sudden, those stocks are zooming back up. So I can't say I'm completely convinced about this rally.
Intimated to me is one of those words that you're never sure that you're using it correctly or that you're saying it right. It's just kind of it's right, but every time you use it, you're kind of like, I don't know if I said that right.
I just say it confidently, and then that's how I say every big word. I just say it really confidently, and then eventually somebody's going to tell me that
Mitch's favorite word along those lines is what?
What is that?
Tangential.
Tangential.
Tangential. Uses that all the time. Another one of those where I'm like, I don't know if he's saying that right, and I don't know if he's using that right. I'm sure he is because it's Mitch, but at the same time, every time he uses it, I'm like, I don't know.
I was just counting on my fingers as far as how many syllables that was. So tangential. So it's 3 syllables.
But that's assuming you're saying it right, though, which I think you are, but I have no idea.
Intimated. Oh, it's 4. See, if you can get a 4-syllable word and you could say it that well, there you go. That's the gold standard.
Well, so look at how close it is to intubated. Totally different word. It's completely different. That's why I tend to steer clear in areas like that because I'm going to come off looking silly. Well, I do, but I look sillier when I try to, use a word where I'm like, I don't know, is that the right word to use right there?
Well, especially when you're around Keith, who just has all kinds of words that I don't understand. So
that's because Keith makes it up half the time.
I think it is totally made up.
Nobody pushes him back on him, so he just acts like he's, in the right when he's not.
Just because it's an old English text doesn't mean that it's right now.
Well, right, exactly, right. And it's fine. I think the idea that back to the focus at hand. I think the idea of the start of the year rally is almost off-putting in some ways to some people, or it's not quite believable right now, and I think that's got a lot of us kind of scratching our heads as to what do we have here. We had a head fake in summer of last year, and is this the same head fake? Now, again, 6-8 more months of down markets have gone under the bridge. Fourth quarter was better, but still we had, more water went under the bridge since summer of last year, but are we still in the throes of a head fake?
Yeah, it seems to me to be a bit early. And so maybe we're just, I don't know, it seems to me that we might be borrowing from the future here. And we're off to such a hot start and things are good and you start feeling better about things. And I think this is going to end up being a head fake. But that's just a guess. If you look at the numbers underneath things, I mean, the jobs report, extremely strong.
Right.
Inflation's coming down. I mean, there's a lot of good stories out there too. The tech layoffs I don't think they're brutal. I think they're kind of a normal part of a business cycle. It seems like a softening, but not an incredible recession. So,
Right.
it seems to me, I mean, will the Fed be able to engineer a soft landing? That'll be one of the first times ever. And people will be very kind to Jerome Powell and all the people in the Fed there if they're actually able to kind of engineer a soft landing. It'll change the way that we look at the Fed, I think. But if it doesn't happen, and I think that rockier seas are ahead, but looking at it's in the context of the market too. The market is anticipatory. It's another one.
That's another one.
Yeah, there you go. So it's anticipating, what's going on in the future, saying that things might not be as bad as we might have thought, and what we're going to end up doing is getting into a situation where, maybe the market gets a little hot, but the economic data gets weaker. So it's an interesting situation right now that we're in the markets, and we'll see whether it persists. But when we look at, I know you looked up some of these numbers, Nate, in the context of recessions and down markets, bear markets. I mean, the average bear market lasts, I think you have the number there, right?
11 months.
11 months
is the average. Now, again, you have to be careful with averages, obviously, because those numbers can get exactly where do you start, exactly where do you stop. But call it roughly 1 year, right, to be generous on it. Is the average length of a bear market. And I think we can all agree that pretty much January of last year is when it started, if we want to look at it that way right now. So to that end, we're 13 months into it, starting our 14th month.
And it depends on what index you look at, but in general, I would say, if we're looking at the overall market, I'd say that's fair.
Right. But I think that what a lot of people lose sight of is that when we pull out of times like this, it's not as clear cut as I think people think it should be or is. You and I were both doing this in 08, 09. March of 09, when we started to pull out of that, out of the ugliness at that time. It's not linear, right? It's not just a straight line. It doesn't just add 100 points every day for the next, 12 months and then we call it good, right? I mean, it's very choppy coming out of these periods of time, and that's arguably what we're seeing right now. And so what's funny about it is I don't think people, when it starts to recover, people don't feel good about the recovery because you're seeing 2 up days, but you're also seeing that third down day, and those down days can be pretty painful. And so I think it's interesting as we come out of these down markets that it's nowhere close to a kind of flat line climb out of it. It's 2 steps forward, 1 step back, 2 steps forward, 1 step back, but you're progressively making progress, progressively making putting distance between you and the downturn, I guess, is the better way to say it, right? And that's what is the beginning of a recovery.
That's exactly right. Well, and you're starting from behind too. It's like you getting put way behind the start line in a race, and all of a sudden you feel relief when you get to the start line.
Right.
But you're not feeling great.
Right.
So
you just feel like you've kind of gotten back to a certain point there where you were, at a previous time. And so I think that's why people can easily, especially times like right now, can start to feel exhaustion within the markets just in general. And there's a lot of people, and rightly so, that kind of get to a point where they just kind of want to throw their hands up and go, I'm kind of tired of this at this point. And that's another sign that we're probably getting close to the end of the downturn. And again, we've been through a few of these now, but when the euphoria and the feel good gets too good for too long, the downturn is going to start pretty soon. And when the exhaustion starts to set in and people start to get to that point where I've had enough of this, that's about when you start to see it pull back out of it.
And if you see a big leg down here, I think you're going to start to test those sort of spirits in people's minds.
For sure.
Because now they got a relief rally and they're thinking, okay, I think things are going to be okay. Maybe this is over. And then if it goes back down and tests those lows, that's when you'll truly see what sort of intestinal fortitude you're going to need to stay in these markets. And the stock market does not care how long this downturn is.
Right.
So there's no manual, there is no, this could last for 24, 36 more months and we could set a new record. I think it's unlikely, but people have to be steeled and they have to have some resolve in this and say, it will be done. It might be done this year. We don't know. And if it is, great. Congratulations. You made it through. And if it doesn't matter. Just keep your investment strategy, make sure that you're talking with your advisor, make sure that you have a plan and you know how to execute your plan.
Yeah, I think that's a great point. I think that the cleanliness that people want within the market doesn't exist, right? We don't cleanly exit these downturns. It's messy. We come out of it a little bit, fall back down, come back up, fall back down, and we finally kind of get our way out of it. And I think that's likely what we're going to see this time as well. So this easily could be kind of our first attempt or second attempt, if you will, to kind of get up out of it, and then we could fall back down and we could try it again and fall back down. And that's not uncommon. I think people lose sight of the fact that, the old, this time it's different. It's never different, but it feels different because we just forgotten what it's like to come out of one of these. Because you got to remember back to how you felt in 2009. That's a long ways to think back to go, oh, I remember how I felt back then. So therefore I have confidence that this time will be the same as that. You don't remember what you felt like back then. And so these feelings are all new-ish, even though we've been through them before. So it's easy to kind of convince ourselves that it's different this time. The headlines are different, but the end result isn't actually different.
I think the hard part about it too is that universally speaking, a lot of people December 31st of 2021 had the highest balances that they've ever had in their lives.
Right.
And then they got knocked down
Yes.
last year. And so they're recovering from that, and they have a lot of bias in that they're saying, hey, I know what my balance used to be.
Right.
And I'm not immune to that. It happened to me too. I mean,
Absolutely.
I was like
Right.
riding high, I was like Scarface at the end of that. And then all of a sudden, you're just getting
without the cocaine.
Yeah, it's true. Okay. Reasonable point. But then you get shot a lot, and then you got to recover from that. So, basically that's where I'm at. I'm surviving my body blows that I got too, just like everybody else did. And, I really didn't turn off what I did. I continue to contribute, and that's what you got to do through this. The nice part about it is if you're in the middle of saving, it's great. If you're in the middle of withdrawing because you're in retirement,
Right.
that's a more difficult thing for you.
And I think what's unique to this one too is that we had the highest level of consumer savings kind of on their balance sheets, if you will, just emergency savings that we've ever had in history. And a lot of that came because we couldn't do anything for 2 years straight because of COVID. And so people were flush with cash. That's starting to wane. You're starting to see those balances come down. And I think that people are starting to realize that as well. Inflation makes the grocery store more expensive and the gas station more expensive and all these places that we go. And so I think people are also starting to feel that too and going, wait a minute, my savings account balance used to be X and now it's, cut in half or even worse than that. I don't feel so good about this. And I think that also is leading to this kind of exhaustion, this I'm tired of this feeling, because people aren't where they were 12 months ago. And they knew that was going to happen.
And they're starting to end some of the COVID sort of emergency policies as well. Right. And the issue with that is people might have to pay back some student loans and things like that that have really been delayed a very long time. Some people thought they were going to get student loan forgiveness. I don't know if that's going to occur. That appears to be a big court thing. So we'll see if that happens or not. I'm very skeptical that that's actually going to be able to be wiped out. So, you might have a lot of people paying student loan debts coming up here. And so that'll be another thing that impacts their balance sheet and their, income statement. And, and a lot of people too are just not seeing the wage growth related to inflation. So they've had to substitute some things or go without some things or just eat from their savings. And then at some point you can't tolerate that any longer and you've got to do something.
Yeah. And Washington is never far from the wanting to be in the spotlight, and, they're going to get their day in the sun here pretty quick here with the debt ceiling debate, because I think it's still 535 of them that, find themselves to be very important in the world and can't help but get in front of a camera. I mean, this is the perfect environment for them to be able to stand up and, boast around about how the other side is a bunch of idiots. And so this is going to play out in front of us again, because they're not going to miss this opportunity to be able to point the finger at the other side. And that will rile things up as well, because this is what happens. So I think is it April or May when they kind of fully run out of money? Is that, I mean, they're kind of into the, what do they call it? Extraordinary measures right now is kind of the phase they're in right now, but they're not there yet. And so, you'll see this in the headlines for the next couple months as well as they, decide to play a game of idiot brinksmanship. Yeah,
I guess, to wrap this podcast, that is one thing that we're hearing more and more from our clients. And I would say, look, they're going to get something worked out with the debt ceiling. I don't think that they're going to allow any sort of default or anything like that. And I know both sides think the other side is crazy, and I appreciate all that, but we've been here before.
I think they're all crazy.
We'll get through it.
I mean, frankly, I think
fair
they're
enough.
all stupid and don't
that's fine.
The interest of the American citizen in mind, but either way, it's fine.
Regardless, they are going to find some sort of debt ceiling. They're going to raise the debt ceiling. They'll both sides will claim victory, and there'll be a lot of clickbait out there, and everyone's going to be clicking and saying, what happens if they default? Not going to default. Just relax.
But to that point, though, default is not what happens a second after they cross the red line, if you will, right?
That's right.
What'll happen first is, likely layoffs or furloughs of what they refer to as non-essential government employees. And that we could get to that point. They could get to a point where they push this beyond that, because we've seen that before. But again, that's not as bad as that is for those people that are in those positions. It doesn't mean that they won't be made whole in the end. And, so even if it gets to that point, it doesn't mean that we're automatically, quote, in default. It simply means that they're going to have to do a few more things that go beyond the extraordinary measures that they're doing right now.
Wouldn't that be great if it just was one day? It was like, that's it.
Shut it
out
down.
Of money. Done. Rest of the year, you got to take off.
I mean, it's as crazy as it sounds. That we've seen crazier things, I suppose. So I've also decided to, just for everybody so they know, I'm done trying to hide when I drink something on a podcast. I'm not moving away from the mic. I'm not doing any of that. So I think it makes it more authentic. So if you hear me drinking something, that's how it's going to be from now on.
As long as you don't slurp. Like, I don't want a lot of slurping.
Yeah, no, I won't get to that level. No, but, and today, unfortunately, for those that will listen to our previous podcast, I'm not enjoying a V8 today. I'm back to, just regular water, which it does feel like a step down. It really does.
Still water. Ew. I mean, come on.
As opposed to mineral water or sparkling water.
Yeah. Yeah. Big fan of the mineral water. I like eating, kind of licking
rocks. What is the way you got? What is it? Toco?
Topo Chico is wonderful, but that's a sparkling water. My favorite is the hint of lime, and they also had a hint of grapefruit. Those are like top notch. Hint of grapefruit, very hard to get. Hint of lime is also quite hard to get. The regular stuff, just okay. I mean, it's good.
Yeah.
But it's just like, I don't know. It's just bubbly water. Like, there's no flavor. There's no essence.
We are now fully away from regular tortilla chips in our house. It has to be hint of lime or out.
I'm totally fine with hints of lime.
Yeah, that's kind of that's the standard now.
I like the dusting of like chili powder as well, like a la Pasquale's. Like, I'm down with that totally. Also, El Rey out of Milwaukee has those sort of dusty chips and stuff. They have lemon.
I think Selena likes the their blue corn, I believe. And they're a little spicy. I don't know what those are that she gets, like red hot something chips. That's another thing too. But it's a tortilla chip, so it's interesting. Yeah, I don't mess with those. I stay with the hint of lime. That's
also, one of our friends likes the bean chips or something like that. That's not a real tortilla chip. I'm out of that. Just eat a regular tortilla.
Yeah,
chip.
right.
Like,
exactly. Right.
I mean, it's not good for you, but
it's moderation.
Some of those things you got to have.
Right.
You can't sub certain things.
Yeah, you can try, but it's not. It's no.
Like, don't bring me cauliflower pizza. Garbage.
Polly in the office, her and Bobby, they love it. The Costco cauliflower, they love it. That's what she said. I've never had it, but I don't.
Sorry,
you don't like cauliflower though, so you can't be like, that's not.
I'm sorry that they don't have any taste. It's not my fault, but I'm right here.
Wow.
Like,
just launched into a different area now.
Sorry about it, Polly, but
mad.
Cauliflower pizza's garbage.
Wow.
And don't try to trump it up like over
somebody cut the mic.
Over at B-Dubs, they have cauliflower like chicken wings or whatever. Like Bill Clickwood the other day,
fantastic.
Yes.
Those are fantastic.
No, that's garbage.
Yeah, no,
it was horrible. Like
the buffalo cauliflower. Those are good. That was good.
He said it as basically a substitute for buffalo wings. I'm like, no, you can't.
No. Okay, so that's a bridge too far, right? You can't say that, right? It has to be its own category. I understand what you're trying to do with it to substitute something, but you can't, that's where people fall down on the argument. It just has to be what it is. It's a good thing. Don't say that it's as good as ... or that it's a substitute for, no. It's its own thing. Just let it be its own thing. Then I'm on board.
Bill Clickwood, just order some fried pickles and be done with it. It's fine. It's not going to kill you.
Now you're getting somewhere. That's a fantastic product as well.
Fried pickles. I had jalapeno poppers.
Yeah, but the worst one, man, is
great.
when they try to get you into like their quote homemade pickles and it ends up not being a full dill pickle.
Oh, no.
That's bad. What is it? It was a place in Madison. I don't know if it's maybe Tipsy Cow or someplace where it's not quite where you're like, oh, nope. And they're still okay, but you can tell what they're trying to do. And you're like, no, don't.
So it's a fried sweet pickle? Or you're saying
it's not a sweet pickle, but because it's a homemade, it doesn't quite have the full punch of the dill pickle that you want.
You need that punch in the face from the dill.
I mean, otherwise, what are you doing?
I don't know either. Yeah.
I don't know why you're going there then.
That's true. All right. Well, thank you for joining us on another episode of Give Me Some Truth. We'll catch you next time. And, leave a little comment on your how much you detest cauliflower pizza, and I'll love you.
Walkner Condon Financial Advisors is a registered investment advisor with the SEC. Registration with the SEC does not imply a certain level of skill or training. The opinions expressed by the participants of this podcast are their own and do not reflect the opinions of Walkner Condon Financial Advisors. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance. Thanks for listening, and for further information, please visit WalknerCondon.com.